In today's video, we will see step by step one of the most used strategies for scalping and day trading, especially in the early years of a trader's career. Welcome to the Trader's Game. And before we start, remember that in the description you have the links to join us in our Telegram community, where every day we post charts and analysis of what is happening in the financial markets. And also the trading bonus page, which has been updated and have added new promotions and free bonuses for all those who are starting in the world of trading. Do not forget to leave your email if you want to receive a weekly newsletter with everything that has happened during those days. As I said, it is the perfect strategy for all those who operate in low but not so low time frames, and in this tutorial we will see it in 15 minutes time frame, which seems to us to be the most profitable of all. First, we look at the 3 EMA Indicator, which basically allows us to use only one indicator space, but allows us to place and configure 3 exponential moving averages at the same time. This is perfect especially for those of you who use the free trading view, which only allows you to use a few indicator slots, thus saving you as much as possible. We place in the first of them length 49, that actually we can place the 3 directly in 49, and the first one we will leave it in closing mode, in the middle one we will place the maximum, and in the bottom one we will put minimum, so we would get those 3 EMAs of 49 periods, but each one of them taking into account different variables of the data that it provides us. In the part of style you can place them to your taste. I, for example, am going to put the one of the middle in yellow, and these 2 I will leave them in white. Even I am going to give him a little more thickness, and already I would have it ready. Although I put here 10, 5200, do not worry because it only shows the default number, but in data entries we have the 3 already in 49. And only with this indicator, that yes, a little later in the video we will add 2 others, but only with the information that these averages give us we could look for operations in a very simple way. The first thing is to look for a breakout zone where there is also a change of trend, in this case to the upside, and where that first wave is going to return back to that area of the averages, so that it will surely produce a bounce. Well, at that moment, when the price returns to the zone of the averages, in the event that there is a rebound in the same direction, we could take the first candle that is driven back above those averages, and in this case we would simply place a bullish trade looking for a 1-to-1 ratio. It is a strategy in which we must always use a 1-to-1 ratio, at least in the first take profit. A little bit further forward we see exactly the same thing, in this case in a bearish direction. There is a break of these averages, and in this case the price returns from the bottom and bounces in the same direction. After that bounce occurred in these areas, exactly with these 2 candles, the first candle, in this case bearish, that crosses that average back down, is the one we have to use to place our operation. The stop loss, we place it above the previous highs, which are also above the top of that average, and as the main rule says, the first take profit will go to ratio 1-to-1. At that moment, when the price reaches that ratio and we collect part of our profit, we can even let it run up to ratio 2-to-1, as long as we place our stop loss in break even, so that in case the price turns around, the rest of the operation is closed and we have kept the first profit. And of course, if the price reaches that ratio 2, we will take double the profit. Now we will add another indicator, the Step EMA Filtered Stochastic. Click on it and we will see something like this, an indicator that is very simple to read, but that will add much more information in our operations. To begin with, you can see how it colors the candles according to the trend style, which combines very well with our special 49 period average. First of all, we go here to configuration and we remove the signals, since they do not interest us in this case, and of course visually this indicator will help us even more to know how to differentiate when we have to enter or not. For example, here we have again another pullback. In the middle of this great downtrend, again we have this red candle that crosses after bouncing, and at the bottom is also the indicator in red, stop loss at the previous highs and first take profit in ratio 1-to-1. As you can see, after a while we are back in positive. Just here, a little further on, there is a trend reversal breakout, whereas you can see the price crosses our averages, rests again with this candle, and in this case does not pull back again, but already in the next candle starts a new uptrend. As here we have already had that first pullback after the breakout, the next green candle that marks that possible rebound, in this case bullish, would be this one. We observe the lower indicator and again everything is correct. We take our operation, we place our stop loss, and first take profit in 1-to-1. This time, as you see, we would also get to touch that second take profit with a ratio of 2. You can even place multiple take profit to your liking, i.e. when the price reaches 1.5 ratio, 1.75, and so on. Finally, we place a third indicator, the swing arm ATR trend, which as you can see is even in the selection of the editors. We place it and it will appear something like this. In this case, we go to configuration, we place the ATR period in 200, and we raise the factor to 8. Then in the style part, we are going to remove absolutely everything except for this part below. That is to say, we have removed everything except this. We raise the opacity so that it is visually clearer, and we would already have it. And with this third indicator, we would have to take into account the colors that we mark at all times. If you look at this area, although we could have entered a short trade since we are below these averages and it would have been quite satisfactory, you can see very clearly how the price is sideways. That downtrend is not yet so clear. However, if we continue, we see how that mark becomes completely red and the price begins to fall strongly, so this indicator will give us an extra security when entering. In particular, this third indicator, I have it simply as guidance, since for example in this area we have here, we see how the price returns to the averages and bounces very strongly. Then noticing the bearish force that has this candle, I would have entered there even before the third indicator marked in red, and as you see we would have also come out in positive, but well, I leave that to the taste of each one. Just in the next pullback, we already have the 3 rules perfectly fulfilled, and after this rebound, the next red candle would be this one here, which is when the lower indicator also turns red. We place our stop loss, first take profit in ratio 1-to-1, and second take profit for example in 2, and again here everything is fulfilled again. As you can see, in the end, using this strategy, we have taken advantage of all the trend continuation pullbacks, trading them correctly and making profit. I recommend to all of you, whether you are beginners or more advanced traders, to try it and adapt it to your trading, as you will greatly improve your results. When you have done it, let us know in comments your experiences, what you think, and if you like our work, leave us a nice like. That is completely free. Finally, do not forget to visit our free Telegram community, which you will find in the description, and the official website of Trading Bonus, where all those who are looking for the best platforms for trading, whether cryptos, forex, or stocks, you can find free bonuses that you can use and get free money. Thank you very much for watching, and see you in the next video of the Trader's Game.